just business news, we're news for business people.
Good morning, you're watching All You Need to Know with me, Jayesh Khilnani on Bloomberg Quint. Joining me on the show is Agam Vakil, who will take us through the FNOQs. But let's first get to the trade setup. Well, SGX Nifty is currently suggesting a mild negative for the Indian markets, currently trading at about 14 points lower. Remember, we started extremely flat. It was just 1.5 point lower, but we have actually slipped from the day's high to about the day's low, as most Asian markets are coming back to trade, with the exception of Australia and Hong Kong, which still remain shut on account of extended Christmas holiday. Let's have a look at how the US market actually closed on Friday. Well, extremely muted going into the long weekend of Christmas. We had the Dow Jones, which declined about 0.1%, and the S&P 500 and Nasdaq declined about 1.25 points each. As far as the Asian markets are concerned, we are not getting many cues from there as well. The Japanese index has actually started off mildly in the negative, but flat to say, which is down just about 23 points. And the SGX Nifty was suggesting an extremely muted start for the Indian markets. As far as the commodity setup is concerned, we saw Brent actually moving up above the 65 mark on account of the US drillers actually pausing the rig expansion, and on account of that we had the WTI, which surged past the 58 per barrel mark. As far as the gold price is concerned, we are seeing extremely positive cues coming in for gold, which has actually held on to gains of about 2 weeks, and COMEX gold in fact has surged above the 1280 mark for an ounce. Now the ice sugar that has snapped its 4-day losing streak, so that's the positive coming in for sugar prices. As far as the fund flows for India are concerned, we're seeing extremely muted cues coming in from there as well, and very thin volumes to say on account of the December seasonal factor. FIs on Friday bought about 108 crores, while the DIs or the domestic institutions pumped in about 400 odd crores in the cash market. As far as the month to date or the December entire picture is concerned, we are seeing the FI net sell number close to about 7,000 odd crores, and the domestic institutions on the other hand have matched them penny to penny and have pumped about more than 8,000 odd crores. Now, as far as the sector is concerned, on Friday we saw that the Nifty IT index moved up about 1.2%, and the Nifty PSU Bank moved up about 0.8%. In terms of the losers, well, this is flat in trade, so you can ignore this. The Nifty Metal Index, though we've seen the base metals have actually rallied for about 8 or 9 sessions now, be it Shanghai or the London Metal Exchange, but the index itself closed lower. As far as individual stocks which contributed to the Nifty 60-point gain, we had Infosys and TCS, which gained about 15 points or contributed thereabout, followed by Reliance and HDFC Bank. On the loser side, we had Ultratech Cement and Coal India, which declined but marginally in the red, followed by Dr. Reddy's and Tata Steel. That said, Agam, what are the FNOQs that you're picking up?
Right, Jay. So as we can see that the fees moved up about the mark of, nearing 10,500. Of course, on an intraday basis, we did see the Nifty breach that mark, come off. So closing just shy of that, where we are looking at just about a 0.5% increase there. Unwinding coming along as far as the Nifty December futures go. Do remember we are entering expiry week, so we will have more and more unwinding showing up in the December futures. It's the same for the Nifty Bank index as well, whereas its futures have down by as much as 0.5%. That said, the VIX has fallen by as much as 4%, so currently standing firmly below the mark of 12. And in terms of the Nifty put call ratio, that has also edged up higher as the Nifty moves up higher to around 1.59 as against 1.48. In terms of open interest changes in some of the options, we have unwinding in 10,400 and the 10,500 calls, and a little more writing coming along in the 10,500 puts. So this does to a certain extent mean that a lot of traders are expecting the Nifty to move up eventually and perhaps close about the 10,500 mark on this expiry. That said, plenty of counters which have moved out of the F&O band. So HDL, Jet Airways and JSW Energy will have trade resume to normalcy, well as we are also looking at fresh longs building up in a few counters such as VGuard, where its open interest moved up by as much as 15%. And we also saw fresh longs in other counters like Mindtree, where open interest has moved up by as much as 11%. So we'll be watching out for some of these counters as we move into today's day of trade.
Stock of the day is Suzlon. The company has entered pack for some selling off the subsidiary to the company named Skeon. The company, the two subsidiaries are named as Shani Renewables and Saroja Renewables. Now this is a part of the process for forming an SPV and then selling it off to the customers. Now SPVs have been formed for setting up wind turbine projects, and Skyron is expected to acquire both of these stake in these SPVs for a consideration of around 280 crore, that is 140 odd crore each. And just to give you a little rundown about the details of the SPVs, they've been formed back in March 2017, haven't even completed one financial year, and their net worth at the time of formation was around 18,000 odd crore. What the company is all about, Suzlon Energy is a wind power equipment maker which has a market capitalization of around 7,000 crore, and the stock hasn't really done much in the past 1 year. It's just fetched a return of around 5 odd %.
So while talking about the Indian rupee, it ended little changed on Friday at 64.05 levels against the dollar as traders avoided long positions ahead of the long weekend. While talking about the Indian unit, it traded in a narrow range of 64.02 to 64.09 levels throughout the day. On the global front, Asian currencies were trading mixed, with South Korean won gaining the most, while the Malaysian ringgit being the biggest loser on the trade. Elsewhere, the British pound ended higher on Friday, and it now trades higher for the second consecutive day against the dollar after third quarter GDP in the UK accelerated to 1.7%, thereby beating the consensus forecast of 1.5%. While the Japanese yen trades little changed after upbeat inflation data, Japan's consumer prices rose for the 11th straight month in November at 0.9% YOY, still away from Bank of Japan's target inflation rate of 2%. While the dollar index trades steady in the early Asian trade near 93.30 levels today, coming back home, dollar rupee is trading flat in the non-deliverable forward market. Now moving on to bond market, sovereign bonds extended losses on Friday, while the benchmark 10-year yields touched a 17-month peak and it ended at 7.27%. While the global funds increased their rupee debt holdings on Friday, they infused close to 800 crore according to NSDL data. Well, that said, let's shift focus to commodities market. Good morning, Jayesh. How are the commodity cues picking up today morning?
Morning, Saloni. Let me start off with gold prices, which have inched up to the 1280 mark for an ounce. That is for the gold futures on the COMEX exchange. Now, this is on the back of some political concerns arising out of Europe. So the investors are now weighing in the Catalan election outcome and how that will turn out, and hence we are seeing demand for the safe haven going up. As far as base metals are concerned, we are seeing a good rally come about for all the base metals on the London Metal Exchange. The index itself actually rallied to about 8 days in a row now and closed almost 1% higher on Friday. As far as individual base metals are concerned, aluminium was the top performer, which gained more than 2%, while lead was the worst performer, which declined about 0.8%. Now, similar cues cannot be seen from the Shanghai Futures Exchange, where we are seeing most of the industrial metals are trading with a negative bias. So, aluminium, copper, zinc and steel, all of them trading about 1 to 2% lower in trade. As far as oil prices are concerned, we have seen WTI inch up to more than 58 per barrel, and Brent has actually surged to more than 65. Now this is on the back of US drillers which have paused the rig expansion, so that's the positive coming in for oil markets. As well as the North Sea pipeline repair is now complete and the testing has begun, so that's the other positive coming in for oil markets.
Well, New Year is around the corner and so are the online annual sale event. I'm here in one of Myntra's warehouses on the outskirts of Bangalore city on the day one of its end of season sale event. And I'll be going inside in the middle of the action to find out how does an e-commerce company actually manages its sale event. Now, on any ordinary day, Myntra has about 700 employees in these warehouses working to ensure the orders are delivered on time. But for this 4-day sales season, Myntra has doubled down on the employees on this warehouse and about 1,500 employees working around the clock, packaging, shipping the products on time. As far as the orders are concerned, Myntra says that it expects it to go up by 25% during this 4-day sales season. Now, to talk more about what's really happening in this warehouse, I have with me Manish Pansari. He's the head of services. Thank you, Manish, for your time.
Thank you, Nishant. Thanks for joining us.
So Manish, take me through where are we right now and what's really happening here?
So we are in the middle of executing our URS. This is the biggest flagship event that we have for Myntra and Jabong now. So what you see behind us is the entire storage area for our warehouse. What happens is we get items, all the items from our suppliers come into warehouse. We do the inward processing and then they come into the storage area. So we store them, and when a customer order comes in, these items are picked from the storage area and they come into the overall consolidation area. As they come into consolidation area, it then moves into the overall packing space. The items are packed and it moves into the overall dispatch hub where they're ready to be dispatched to the customer. We sort them depending on the destination and it goes to the rest of the country and gets it delivered through our own network and even through the third-party network that we work with.
Right. And what kind of automation you have deployed to faster delivery of orders?
So there are multiple things we're looking at. One is simple operational automation. So for example, things like conveyors, things like sorters. That's something that we've deployed. In fact, conveyors, for example, we have about 4 kilometers of conveyors in our warehouses today. That helps us move the items faster. We're also looking at automatic sorting. We're looking at automatic packaging and automatic storage and retrieval systems as well. So some of them have been deployed, some of them are in pilot stage, but as we scale along, we will see a lot more of this coming in. This is the part where items are ready to be shipped. It comes here, we check whether these are the right items that the customers have ordered, we pack them, and then we ship it out to the dispatch hub which you see on the front here. Right. This is where the sorting happens, to the right locations. We have about 200 centers of our own network, and we also use the third-party network. The sorting happens here, and then we move it out.
Right. And you also mentioned about, you're aiming for a 25% faster delivery.
Yes, yes.
How are you doing that?
What we've also done on our logistics side is scaled up our Mensa channel. Mensa is the Myntra's extended network that we use for our service augmentation. We've scaled that up from 10% to 40% of our sales today, of our deliveries today. And what we really do there is partnership with the Kirana stores which are closer to the customers there. They help us deliver, and what we also started doing is doing reverse with them. We again use AI to process which customers use which channel and get the return also processed from the Kirana store.
Now we're standing up in front of a conveyor belt which segregates product from the storage unit. What more is in pipeline as far as the automation?
So there's a lot more in the pipeline. So for example, in some of our other facilities, we've already deployed sorter systems. What we're really looking at is how do we automate packaging. All the packaging lines that you see, we actually get packing machines similar to the way FMCG is. We're also looking at how we can really look at deploying RFID for end-to-end functions across the network. We're also looking at how some of the areas in the storage system can be automated. So how can we look at automatic storage and retrieval systems, which really helps us speed up a lot of these things. And next time when we have a scale of this nature, we're able to deliver service experience experience, which is actually similar to a BAU experience that we have.
Right. And you know, when automation comes in, there's a fear of job loss. So how will it mean that you need less number of people to do the same amount of jobs? How will it impact in terms of employment?
So it's what will happen is there is the dependency on the temp manpower that we get. That will go down, but it doesn't mean there's going to be job losses. What we do is because the scale increases, there's more job creation opportunities that really happen. Of course, the dependency on the temp that we get for 10 days, 15 days, that will go down. But overall, we expect to create a lot more jobs.
Right. And that also means that you might need to reskill people to understand and adapt to the technology.
Yes, absolutely. So what will happen is the kind of skills that we need today are going to be different from the kind of skills that we really are looking at. And we'll need to retrain our employees.
All right. It's a pleasure speaking to you. Thank you, Manish, for your time.
Thank you.
Well, amongst the stocks that we're tracking today morning is GAIL India, and this is on the back of a PTI report which is suggesting that IOC and BPCL, both the companies are keen to acquire government stake in GAIL India, and both the companies have separately submitted or approached the oil ministry with the proposal of GAIL integration. Now, remember that the government stake in GAIL India is valued at close to 46,700 crores. The government, of course, is yet to take any decision, but do keep an eye out on all these oil PSUs. Amongst the other stocks that could likely react today are some of the names that I'm going to talk about on the back of order wins, starting off with BHEL, which has won an order worth 672 crores from the Indian Railways. You also have L&T, which has won a Delhi Expo Center Phase 1 contract worth close to 2,800 crores, and you also have Welspun Corp. Now, that company has won an order for the supply of 1.24 lakh metric tons of pipes, and with that the company has said that their order book now stands at close to 7,400 crores. So do keep an eye out on all those names. That apart, you also have a Mint report which is saying that the Cummins Group is in talks to buy Kirloskar Oil Engines, a controlling stake in the company, for close to $500 million. So do keep an eye out on Kirloskar Oil Engines. A news like this could keep the stock active. You also have Tata Power, which is one mining license project in the Far East province in Russia at about $4.7 million. The company, of course, has said that they will deploy these thermal coal reserves for their Trombay and Mundra plants. After Tata Power, we are also tracking names like EID Parry, where the company has said they will hive off the biopesticides business to Coromandel International for 338 crores. Now, do remember that Coromandel International is a subsidiary of EID Parry. Now, they have said that they will complete these transactions by about April 2018, and the rationale for this slump sale was that EID Parry wants to focus on its food and nutraceuticals business. GVK Power is also in the picture after the company's subsidiary won a bid for coal from Coal India. They have said that they will sign the fuel supply agreement after submitting certain requisite documents. So do keep an eye out on that name. That apart, you also have Tech Mahindra, which said that they will acquire an additional 32% stake in Comviva Technologies for 328 crores. So that's an IT major that you need to watch. That apart, you also have Prakash Industries. We could see some positive reaction there after SEBI revoked the shell company status that was given to the company. So keep an eye out on that name. And lastly, we're also tracking Lokesh Machines, where Sushmita Ashish Kacholia has sold 0.7% stake in the company on Friday. Now, this is a company which has a market capitalization of 126 crores and closed 3.5% higher on Friday. So we could see some negative reaction there. So these are some of the stocks that you need to track in trade today.
Well, bunch of other stocks to keep on your radar today, backed by the cash volume as of Friday. First up, we have MRF, which was up nearly 3% in trade and saw delivery buying of nearly 90 crores. The delivery volume surged 140% at about 12,500 shares as compared to its 5-day average, and the total volume doubled at about 30,000 shares as compared to its 5-day average. eClerx, the other stock to watch out for, it gained more than 9% on Friday and saw delivery buying in excess of 60 crores. The delivery volume shot up 300% at about 4.5 lakh shares as compared to its 10-day average, and the total volume too surged about 700% at nearly 20 lakh shares as compared to its 10-day average. HCC, the other stock to watch out for, it was up more than 6% and saw delivery buying in excess of 60 crores. The delivery volume surged more than 380% at nearly 1.5 crore shares as compared to its 10-day average, and the total volume too surged at about 400% at 5.5 crore shares as compared to its 10-day average. Now, we saw that the Nifty IT index was the best performer on Friday, and we got interesting delivery data coming in from Infosys and TCS. So Infosys was up nearly 2% on Friday and saw delivery buying of 460 crores. The delivery volume shot up 60% at about 45 lakh shares as compared to its 10-day average, and the total volume too surged about 65% at 68 lakh shares versus the 10-day average. TCS, which was also up 2%, saw delivery buying in excess of 200 crores, and the delivery volume was up 25% at nearly 8 lakh shares as compared to its 5-day average, and the total volume too surged more than 70% at 20 lakh shares as compared to its 5-day average. So watch out for some of these IT names.
The issue of fiscal prudence sort of transcends in individual circumstances. Of course, you can always argue that rules, when they're designed, have to accommodate shocks. They have to be flexible enough to, not to lock the government into a situation where it cannot respond to a shock. So I don't think there's any practical rule in place which does not give this flexibility. But then there have to be very clear boundaries, if you will, or understanding on what are the circumstances in which these rules can be bent, or where the flexibility comes in. And typically in rule formation, these flexibilities are given to the government to deal with a very severe exogenous shock, and not a sort of necessarily, and of course one could debate what an exogenous shock is, but a policy transformation will have its own consequences, and you want to sort of use that flexibility to accommodate this, I think becomes an issue, because the ultimate test of a rule is credibility. How, once you set it up, how committed are you to adhering to it? This is true of inflation targeting, this is true of fiscal rules, or any rule for that matter. And if you undermine credibility in whatever fashion, then the value of the rule is gone. Then you might as well just go back to a discretionary kind of framework. So if you're committing to rule, and I'm talking generally, I'm not talking specifically of India. If you're committing to rule, then I think you have to accommodate the possibility or the reality that there are very, very limited circumstances under which the system will tolerate deviation before before sort of saying, look, there's no credibility to that rule. And I think the benefits of the rule also have to be seen. Why are you getting into rules in the first place? It is largely because in the absence of a rule, the kind of fiscal space that you need to pursue what might be considered sort of high priority, national interest and growth and inclusion and all of those very, very critical objectives. That space remains, and for example, if you are committing to an infrastructure, a publicly funded infrastructure strategy, and 1 year down the road, something happens which reduces the resources flowing into this, your strategy falls apart, because you cannot be stop and go on these kinds of commitments. Now we have many requirements that are going to put pressure on the fiscal situation from a long-term perspective. You have to make commitments, and you have to be consistent in your commitments over time. Infrastructure is the primary example, but there are others as well. And if you're not able to adhere to those commitments, the strategy falls apart. So I think rules help in allowing the government to make these kind of longer term commitments with credibility, with assurance that the resources are going to be there, and that people can actually come in, whether it's PPP or SPVs or whatever mechanism, that you can actually start doing that, putting those things into play.
You also represent countries such as Bangladesh and Sri Lanka on the board of the IMF. The one puzzle for us here in India is our exports growth. Just when the IMF projects 4% growth in volumes, which is I think the highest in about 6-7 years, and there's robust growth everywhere. India's exports are languishing, certainly losing market share in sectors such as textiles and apparels to countries such as Bangladesh. I'm assuming you've observed these countries quite closely. So can you explain what explains some of the rise of Bangladesh in the world exports market?
Bangladesh, 80% of Bangladesh exports are garments.
Yeah.
And I think what you're seeing to some extent is the power of concentration, of focus, but also along with the focus come big risks. The system has to be sensitive.
So when you say focus, it's like policy focus.
Well, it's like you could say a sort of picking winners kind of thing, which is that the whole system is geared towards satisfying or meeting the requirements, the interests of the garment industry, because it's so dominant in their sort of on their radar screen, and so everything that comes in their way is dealt with fairly quickly, and it's paid off. I mean, in terms of growth, in terms of the employment that garment manufacturing generates, and the garment manufacturing community, the constituency, has become a very influential community in terms of their impact on policy decisions. So, if there's a problem, they are heard, and there's every attempt made to address it. We are much more diversified. We have multiple lobbies or constituencies, and so being able to focus on one thing, I think, is a little more challenging for us. We've had successes in the past where pockets have worked. IDES is one example. Auto components is another. Pharma is a third. There are a number of them. But as people have pointed out, these are not necessarily the sort of labor-intensive, traditional labor-intensive manufacturing activity that we would like to succeed in, where our exports perhaps have languished a bit. So I think where we not...
Any policy lessons, specific policy lessons?
I think the larger debate in India on facilitating employment through reform of the labor regulations, through a combination of market flexibility, safety net, and skills. That's to me the triangular sort of model for employment generation. We have to try that. We have to put effort, and so it doesn't confine itself to garments. Garments will be one part of it, but there are other things that can benefit from this combination of
but is there empirical evidence from Bangladesh, for example? I mean, did they indulge in labor reforms?
Oh, absolutely. They had no legacy of the Industrial Disputes Act and its reforms. So the Bangladeshi labor market is, in a sense, what we have been aspiring to, which is great flexibility. So if business slumps, there is nothing that prevents workers from being fired. But because there is so much buoyancy in the industry, jobs are not very difficult to come by. So in a sense, there is a safety net provided by that focus.
Yeah.
Because not the whole industry isn't going to slump at the same time. Individual producers may. And so they're clustered, so that if you lose, it's Silicon Valley, clustering the benefits. If an IT company shut down, there are 5 others that are willing to hire your particular skill set. And in a sense, that is what works with clusters.
And there's lots to talk over the course of the day, and you will find all the live market action on Bloomberg Quint. But there are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. In a Christmas gift to Mumbaikars, the country's first air-conditioned suburban train commenced services on Monday. And the train operated between the Western Railway began its journey from Borivali station to Churchgate in South Mumbai. And the new BJP government in Gujarat, led by Vijay Rupani and his deputy Nitin Patel, will be sworn in at a grand function in the state capital, Gandhinagar, today. But with that, it's a wrap on this edition of All You Need to Know. Indian Open is up next. Stay tuned in a Bloomberg Quint.